Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of February 26th. Each week I go through the same process just to determine if I'm going to be deploying capital and how aggressively I'm going to be deploying capital during the week based on how the indices are performing, market health indicators, how my trades and watch lists have been performing, and then we also take a peek at sector performance. If you're ever wondering where this article is, if you're watching the video, it is under stocks, and if you go to stock market analysis and trades, this article is updated each week. So heading into the week of February 26th, market conditions are still good. I'm deploying capital on long trades. These are the stocks that I am watching for trades in. So we have the best swing trading stocks list, which is high momentum, strong stocks. If you're limited for time, this is a great list to check out, and I included an article here which basically shows how you can just hammer through that list really quick. It's a short list, so you can just go through looking for it. Covers a trade setup in there that you can look for. So I'm using that one a lot right now. The current stock watch list, a little bit different list. It's also generally higher momentum stocks, but it's stocks that have specific patterns forming for our strategies right now. So those include earnings trades, tater strategy trades, which I use for this list as well, and then also specific chart patterns such as like triangles, rounded bottoms, things like that. You could also check out these lists for some other ideas. The best performing ETFs, best performing stocks, obviously they've been doing well. And then for a little bit longer term trades, we have the buy the dip stock list, buy and hold stock list, and long term dividend stocks. So it's a little bit more longer term approach. Looking at the indices, I look at several different indices just to give me a sense of how the overall market's doing in different pockets. One index may not always give you the whole picture, so let's just jump right in here. So we have the NASDAQ in the upper left, followed by the NYSE Composite in the lower left, the S&P 500, the Russell 2000, which is smaller capitalization stocks. NYSE, a very broad measure, this one over here, because it covers everything on that's listed on the NYSE. So very diverse range of companies in terms of their size, their industries. So a really good kind of broad measure of what kind of the typical stock's doing. S&P TSX is the Canadian index, so the TSX Composite Index, just to look at how Canada's market's doing. And then we also have Bitcoin over here. Note that Bitcoin have a bit different scale on here. This is a weekly chart, so we are seeing multiple years of price action there. So let's go through these. And we're seeing pretty much uptrends in the NASDAQ, S&P, and NYSE Composite. NYSE Composite very clear, making higher swing highs, higher swing lows. Same with the S&P. NASDAQ a little bit more choppy, but we are hanging out right near those highs. Overall making progress to the upside, and we'll discuss market health indicators in a bit, but they have not turned negative. So at this point, still riding this uptrend. Did get whipsawed a little bit last week. I'll touch on that a bit later on, because we had this gap lower, then we kind of moved back up. So I did have a couple positions that were stopped out on this little whipsaw. We had a bit of a down move in the NASDAQ before recovering late in the week, and doesn't bug me. We're going to have losing trades no matter what, even if the indexes are going straight up. Not all stocks, even if they were strong before, they might sell off a bit. So overall market conditions still quite good in this overall uptrend. We have not seen any really big selling. The one thing we noticed, in which we've been discussing for weeks now, is the Russell 2000 a little bit weaker. It's forming this kind of rounded bottom pattern, starting to move back up, but it's still below its prior highs from late 2023, whereas all these other ones are way above their late 2023 peaks. Here the NASDAQ was, and we're way up here. Same with the NYSE Composite. We finished the year there, way up here, finished the year there, way up here. And Russell's a little bit different, but at least it had a bit bigger sell-off, but at least we're edging higher. So lots of stocks doing well. Maybe some of the smaller cap stocks not doing quite as well, but overall still lots doing well. Encourages me to keep deploying capital on the long side. Canadian index got quite choppy here for a while and is now moving up and out of this choppy range it had been in. Bitcoin, strong rally since the start of 2023. So getting to be a little bit over a year old now, this rally. This was about a 21% decline, which we saw in mid to late January, from this little spike here down to that spike here. The median rally during a bull market that follows a 20% plus decline is 75%. I think when I measured it out, we rallied from this bottom point here to up here, we're at about 35%. That would be an extremely small rally for a bull market. So likely to continue higher into the 50, 60, 70% range off increase off this low. So that would give us, a little bit more up into this area here. And then at that point, we start to expect a 20% plus correction again. So Bitcoin's still looking good, acting strong. We did pause here a little bit, but the selling has been quite muted. So yeah, overall looking quite good on the indices. Let's check in on the health indicators. So this is the S&P 500 chart just for reference. And these are indicators that not necessarily related to the S&P. Some are, some aren't. So this is how many stocks are above their 50-day moving average. So the turquoise bluish line is all US stocks. The red line is S&P 500 stocks. So we can see 66% of S&P 500 stocks are above their 50-day moving average, and 52% of all U.S. stocks are above their 50-day moving average. So we're above 50, which is what I want to see. That's generally kind of my cutoff point. If we start dipping below that, especially with both lines below it, that kind of says, more than half of stocks are, kind of choppy or moving down. So I'd rather not trade. So this is still positive, but we have noted this divergence. While the price has gone up, fewer stocks have been above their 50-day moving average. You may have noticed that in your trading. While the indices are looking good, maybe some of your trades are just kind of bouncing around or even dropping. But overall, on average, most stocks are still doing pretty good. And so that encouraged me to trade, and we're starting to just peak up a little bit off that 50 line. This volume not important to me at the moment. This is rate of change, basically the percentage daily movement of the S&P 500. And what I'm really watching for with this one is 2% daily drops. Those are really strong indications that lots of sellers came into the market. We have not had a 2% drop in a day in a very long time. Lower volatility is indicative of an uptrending market. You can see we don't drop below this red line, whereas back in 2022 when we were in the bear market, you see lots of drops, and that's just indicative of strong selling in the market, and lower volatility, smaller daily drops, more indicative of uptrending behavior. So that's good to see right now. This is the advanced decline line. Advancing stocks minus declining stocks is a cumulative number. We like to see it either leading the S&P 500 or at least confirming the S&P 500, and it is moving up as the S&P 500 moves up. So that is good. This is up volume divided by total volume. And what I'm really looking for here is extreme values, either 90% upside volume or only like 10% upside volume. So 10% upside volume would mean very little buying interest, lots of selling interest. 90% upside volume on a day means 90% of the volume that occurred in that day occurred in stocks that moved to the upside. Very strong indication of strong buying. But nothing really of interest. We had quite a few kind of 80% upside days. We had a 10% up volume days. That's indicative of more selling. But these were all a little while ago, and we've basically moved to new highs since. So there's nothing really of interest to me here at the moment. Ultimate indicator is how many quality setups there are and how trades are working for you. Basically, are you performing well or are you not performing well? Are you seem to be in the right stocks or in the right sectors? And if not, that should give you some information on where you should be trading. So at the moment, still pretty happy with how things are going. Like I mentioned, I did get whipsawed out of a couple. You get the drop on the day we dropped on the S&P or gapped down, and most of those stocks ended up recovering a little bit. But I get stopped out. That's it. Just look for new opportunities if market conditions return to favorable, which they never really went negative. So I was just continuing to look for opportunities. You take that capital you get stopped out on, and you just put it in something else. So overall, still happy with how the market is doing. So continuing to deploy capital alongside currently. Let's look at the sectors on the move. I didn't really change anything here this week. It still pretty much looks like technology, communication services, consumer cyclicals, industrials, healthcare, financial. Those are pretty much your top performing sectors on these time frames. And I mentioned up here, I don't typically end up trading utility or consumer defensive stocks. And the reason is because they just don't tend to show up on my scan list, because I'm looking for things that perform very strongly, and you're not typically... You may get the odd one, but you're not typically going to see a utility stock up 30% in a couple months. So, whereas I'm going to get all the technology stocks and things that have been performing really well. So these just tend to be kind of more muted, more stable type stocks, and that does not mean they do not decline. Do not misinterpret that, but they just tend to be a little less volatile than some of these other sectors. So I prefer those more volatile, faster moving sectors. So I don't go into utilities or consumer discretionary. I just mentioned that because consumer defensive was the top performer last week, but I'm not going to end up trading it because those stocks are generally not going to show up on my scan list. So these are the ones that most likely are going to show up on my scan list, stocks within these sectors. So what am I doing right now? Well, deploying capital, and of course there's always the option to day trade as well, stocks, forex, futures, and that provides some income when maybe conditions aren't great for swing trading on the long side, or we're just kind of choppy, so we might want to stay out. The day trading provides action and profit potential pretty much every day, so it's a little more stable, I guess, than swing trading. And also passively investing, can do that each month, just putting a little bit into index funds that have shown a long-term price appreciation, like the S&P 500, so ETFs based on the S&P 500, things like that. So that is your stock market outlook for the week of February 26th. Have a great one out there.